without further ado.
Very nice. Let's wait for Jonathan to give us the go ahead here. All right.
So I want to thank everyone for taking the time to be here today for the lunch and learn. I hope that everyone's having a great summer here so far. The food today is from a couple of great North Van spots. It's where I grew up. La Galleria Sandwiches in Edgemont Village, as well as Harmony Donuts there on Lonsdale. I know we're working on our summer bodies here, so I apologize for the donuts, but they are very tasty. Dan and I met back in 2015. We met through RAIN, which is one of the real estate investing groups. And this was right as Dan was starting his realtor journey. So it's really cool now, 8 years later, to see how much Dan's grown, to see the team that he's put together here, and as well as be here in the Vancouver Life office today. So I want to thank Dan, Ryan, and the whole Vancouver Life team for being here today. So I know there's been a number of familiar faces here. Dan has also spoke at a number of our team's investment summits, both online and in person. He spoke at the brunch and learn we did back in February. So it's great to see a bunch of familiar faces here as well today. For those of you I'm just meeting here for the first time, my name is Taylor Steele. I'm both a realtor with eXp Realty, and I also have my private equity license with Integrated Equities. So Integrated Equities is a private equity brokerage. We're registered across Canada, and we help busy working professionals and business owners invest passively into real estate. So at Integrated Equities, we provide our clients with direct access to private real estate investments, and one of them I'll be presenting on here today. Quick show of hands, how many people here have invested in a private equity investment or a limited partnership style investment in the past? Great, cool. So I think a lot of people here in the room will be familiar with the buy and hold strategy, which a lot of us are focused on here today, which is buying an individual piece of property, individual title piece of property, putting down 20%, getting mortgage financing for the remaining, and then either self-managing or setting up a property management company to help you manage that rental property. So that's a strategy that a lot of our clients are very familiar with. And I wanted to highlight some of the key characteristics between private equity real estate investing and buying a buy and hold property. So the first is investing in these projects, there's no mortgage required for the investors. So whether you can't qualify for a mortgage, whether you don't want to qualify for a mortgage, or you just don't want to deal with all the headaches of going out and getting one today, investing in these types of projects, you as the investor don't have to get the mortgage financing. The developer arranges all of that for these projects. The second difference is these are generally with a targeted investment time frame. So this project here in Vernon, this is targeting 19 months from start till exit. And so as an investor, you don't get to pick and choose when the project exits. It's at the discretion or at the decision making of the people that are running these projects. So if you want to be in a project for 5 years, maybe taking a look at a 10-year development play might not be the right fit for you. And then the third key characteristic is generally these investments are illiquid. You can't just wake up Tuesday morning and decide you want to sell your portion of this investment. This capital is being used for the construction and the development of these buildings, so there is no liquidity or there is no redemption partway through these investments. So some of the benefits of investing in private equity, the investment minimum across the board for a lot of these groups you work with is $25,000. So you can invest using registered funds, TFSAs, RSPs, and you can also invest using cash as well with a minimum investment of $25,000. So this really allows people to diversify their investments. They can diversify across different cities, across different real estate asset classes with this lower minimum to participate. And finally, one thing that a lot of our clients really like is these are very passive, hands-off ways of investing. You invest your capital into this development, and WestUrban is involved in all of the process from acquisition, permitting, construction, leasing up the building, and selling the building as well. So as an investor, you're not involved with any of the day-to-day of owning or working on the project. So at Integrated Equities, we currently work with 6 private real estate investment companies. And today I'm going to highlight our development group that we've been working with here in BC called WestUrban. And so in front of everyone there is their most recent project there in Vernon, BC. So this company's been around since 2017. We started working with them at the end of 2022. So when we're partnering up with groups deciding to work with them, we want to see a track record of them taking projects from start to finish and delivering strong returns for their investors. So they successfully completed 16 projects, and now we're working with them, having worked on a project up in Kelowna, over on Vancouver Island in Duncan, and as well as now this project here in Vernon. So their headquarters is located over on Vancouver Island in Campbell River. Today they've completed 16 projects. 11 of those have been successfully sold to major REITs, and the average annual return to their investors was 25% across those 11 projects. So when we're taking a look at development deals, generally we want to see a targeted return of 20% per year, and to date they've successfully completed 11 projects, have targeted or achieved just slightly higher than that at 25%. So this project in Vernon will be their fourth one up in the interior of BC. And so investors have the opportunity to invest in the construction and then the sale of an 84-unit, 4-story wood frame apartment building there in Vernon. So this one building, it's a rental building, so it's under one ownership and all of the units are available for rent. Different than a condo building where each owner owns an individual unit inside that building and they can choose to rent that out or to live in it. So since this is rentals and not condos, there are no pre-sale requirements for WestUrban to start construction on this building. And in the marketplace today, we see that as both a risk and a benefit to the market. The fact that pre-sale construction has less confidence right now, mortgage rates are high, we're going to see less product being delivered to the market, which we believe will continue to impact the supply and the demand imbalance that we've continued to see. So being a rental building, they don't need to meet these pre-sale thresholds to begin construction on this project. So a couple reasons why we like Vernon as a market. The first is its 1% vacancy rate. It's got a very low vacancy rate, less than 1% today. It's got a growing population, and I think the main reason why a lot of these secondary markets are experiencing significant growth is really based on affordability. You've got Kelowna now where 1 bedrooms or 2 bedrooms are renting for close to $3,200 a month. If you live in downtown Kelowna, it's become more expensive, so that's pushing people out into these secondary markets such as Vernon. And also the demand for brand new rentals. The vacancy rate is 1% across all product type, including older buildings. And so part of the reason we like new product is it generally tends to rent quicker and it tends to rent at the highest market rent. So the investment time frame for this deal is, the investment time frame for this particular deal is a total of 19 months. So WestUrban collects the equity 1 month before they expect to begin construction on this project. So for them, they go through all the zoning and the building permits behind the scenes. They bring on investors right as they're about to get their construction financing and begin the construction. So 1 month before they begin construction, they'll collect the equity. About a 15-month build period for them start to finish to build the 84-unit building. And then as well as an approximately 3-month lease-up period for them to rent up and lease up all of the built units inside of the building for a total of 19 months. Upon completion, upon the building being built and fully rented up, this is when they look to sell this to a REIT or a real estate investment trust. These are the buyers that are out there looking for brand new properties to add to their portfolio that are fully rented up. And so the benefit to these REITs is they get a brand new building where WestUrban has done all the heavy lifting to build it, to rent it up, and they provide them with a stabilized property at that 19-month time frame. So as an investor, you're expected to be in this project for a total of 19 months from start to finish, and the projected annualized returns are approximately 20% per year over that approximate 2-year period. So we have a couple different ways that people can continue to learn and see these projects in person. The first is next Wednesday, July 26th at 1 p.m. We have one of the partners with WestUrban. He's going to be giving a webinar presentation to our clients across the country. So that'll be both live and recorded for those who can't make it live. And this is a great opportunity for you to really see firsthand what this company is up to, learn more about their business model, the specifics of the Vernon opportunity, and ask questions directly to the developer himself. So that's the first way. The second way is we organize investor tours for people to see firsthand the projects that they're investing in. We're going to be doing one over to Vancouver Island because that's where they have a number of completed projects. So investors get to see projects under construction, nearly built, as well as completed, so they get to see the final quality, as well as the developer will be on the tour, so get to ask questions to them, as well as network with other real estate investors. And then finally, the third way people can learn and see more is October 22nd. We're going to be doing another one of our Brunch and Learns, which Dan had spoke at back in February. WestUrban and their team will be there presenting their project. So whether you want to see it online, whether you want to see the projects in person, or you want to meet the partners that are running and operating these projects, there's a number of different ways, as well as we're going to be sending out electronic copies of this, the full investor package, their track record, as well as the financial performance as well. So hope this was informative, and I'd now like to open up the floor to any questions about integrated equities, WestUrban, or the Vernon project.
So what is it about, like, if they don't sell the property?
Yeah.
What
So-
happens to the investors?
Yeah, so great question. So their plan A is to exit upon completion and sell the building right as it's done and rent it up. That's the plan A. If plan A happens, that distribution coming back to the investors will be taxed as business income or as income coming back. And the reason for that is that's their business plan, that's what they're setting out to do, is to build and sell. And so from an income perspective, if they go with plan A, that money coming back will be taxed as income. Whereas if there's not an appetite within the market for them to sell to a REIT at completion, they will then put on CMHC financing, which is the financing programs that are available for rental buildings, which is much more favorable than what you or I are going to go and get from the bank if we were to buy an individual property ourselves. And so they'll put on CMHC long-term financing. They'll refinance part of that original equity back to the investors. So for example, in the previous deal that we had, about 75% of original equity would plan to be refinanced upon completion, and then the investors would continue to hold that building as a rental building for up until a period where they would sell that. And so it could take the project from approximately 2 years up to 4 years. The then benefit of the project going longer on that side of things was the income that's coming back to the investors, where the gain is expected to be taxed as capital gain versus income if they hold the property versus sell it at completion. So many investors are saying, hey, I'd like to be in and out of the building in 2 years because that's what it says it's going to do. There's also some investors that say, hey, capital gains is way better than income. Why don't we hold on to the building for another 2 years and sell it for capital gains? But they have to have a business plan going in, and their business plan is to build and sell upon completion.
Nice.
You already have, potential buyers lined up already, maybe based on past deals?
Yeah, so obviously having completed 11 of them so far, they do have a number of groups that they've worked with in the past. And so generally around 3 to 4 months before the building is completed, that's when they'll start the discussions with those REITs to shop it then. And so that 3 months before, 3-4 months before, they anticipate kind of 2-3 months to have it fully 100% rented up. And during that time frame is when they project to lock in an offer and sell it that way.
Gotcha, okay. For this lot specifically, like, was it houses before, or was it did they have to clear the lot?
Yeah, so this is bare land right now. So this is a grass site right now. I was actually up there a couple weeks ago and saw the project there. So in terms of, there's no further demolition to existing structures on the building, and it's nicely located directly across the street from a little park.
Is it serviced?
I do not know.
Okay. Do you know, do they have DP in place?
Yeah, so they have the building permit in place, as well as their construction financing lined up here.
Beautiful. Okay. What about their trades? Do they do in-house, or are they third party?
Yeah, so that's one of their cool differentiation factors is they have a lot of trades that they work with in-house, and part of their ability to further those relationships, and I'm sure we all hear the war stories of development right now where if you're a carpenter, you've got another site that's paying them $1 more, and so, you know, it's a dog-eat-dog world out there in the trades world, and so to incentivize and sort of create these partnerships, they allow for the trades and the trades companies to also invest into the project that they're working on, and so they actually also have an ownership equity position in this project, and so they're also incentivized for things to be done on time and on budget, because there's also an extra, call it, reward for them at the end of the project in addition to them getting the contract and the pay for that project. So developing those relationships and having sort of in-house trades that are also alongside you for this project is something that they're very proud of, and then everything from construction to leasing, acquisitions, construction, leasing, they handle in-house. So there are approximately 220 employees spread across BC here, so quite a sizable operations right now.
So adding to that, you mentioned this is your first or your second project in Vernon?
This will be their first in Vernon and their fourth in the interior region.
So going back to the construction side of things, they plan on getting a local builder and just bringing in one of the project managers, or what's the plan?
So builders, they'll bring in-house, they have in-house builders, and then project manager, they'll generally move their project managers around from site to site. So the one in Duncan, as things wrap up, he'll move over to another site and vice versa. So staggering and moving over those project managers to as they see fit.
Right, because I see their capability in Campbell River, for example, right?
Yeah.
They've done a lot, and obviously they've got people and employees and stuff, but Vernon might be a new market for them.
Yeah.
So obviously I assume there's challenges. It's not like building for them in Campbell River, so I just want to make sure they've got like the same plan in Vernon that they do when they build in Campbell River.
Exactly. And that's a great point, and I'll definitely clarify that with them on sort of how they expect to replicate that formula that they've developed over there and replicate that in both Vernon and as well as the Okanagan region as well. So I'll get a follow-up point on that for you as well.
Okay. Tell us a little bit about the structure. Like, is there a special purpose company that's going to be made for this project, who's going to own the project?
Mm-hmm.
How does it work?
Great question. So how these are structured is they're structured partnerships for each project. So there's no commingling between the different deals, the Duncan deals, the deal there, the Kelowna deals there. And so they set up a general partnership, limited partnership for each of these. WestUrban is the general partner. The investors that make up approximately the $4 million of equity, that group of people will be the limited partners. And how the profit share structure works is upon completion, all profit after the loans are repaid is split 50-50.
50, yeah. Okay.
And how does it work in terms of if there's construction overruns or delays in terms of that side of things? I believe that your slide deck previously was saying something along the lines that WestUrban covers cost overruns or something about that with respect to the guarantees of the loan and that?
Yeah, so part of their way of kind of mitigating downside for the investors is cost overruns. Time overrun, there's no real way to mitigate or prevent that or recoup things that way. Whereas in terms of the cost overruns, WestUrban, if there is cost overruns on the construction side of things, we'll step in and take care of that.
Does that take away from the profit at the end of the project
No,
towards the investors?
no,
Or that's
so
a strictly
that's
out-of-pocket expense on WestUrban?
Exactly, yeah.
Gotcha. Okay.
I have another question. You were mentioning that obviously the plan is to build and sell,
Correct.
right? And I understand too that if there's not a feasible offer or a financially feasible offer from a REIT or somebody else to buy it, we'll just keep renting the building. You've got in your pro forma here 2 term financings, right? One is for the 50-year and another one is for 40 years amortization.
Mm-hmm.
And I see the rates, and I want to know, is WestUrban getting any kind of covenant to try to get those rates down? Are there any covenants on the rents themselves? Because I know CMHC has different programs for apartment buildings. So, like, you might get a very good rate, but then there's a covenant on your rents.
Mm-hmm.
So, what program would be applying for?
So from my understanding, they're applying for the CMHC MLS program, which is the new program there. I don't know the answer about the covenant, so I'll get back to you on that about the rent covenant.
Okay, I mean, I'm asking because I understand both sides, right? And if I'm going to invest with you guys, I'm willing to sell or to stay with the rents. Doesn't matter. But on the rent side of things, I just want to understand, like,
For sure.
if the rents are going to be capped or not.
From my understanding, there is no cap on the rents, no.
Okay.
Does WestUrban ever plan to do just a build and rent and hold?
So there was a project that they were talking about in Abbotsford that sort of fit that parameter where they would like to hold on to that upon completion. We haven't seen that come across our table yet, but we would expect one of them in the next little bit to be one where they're positioning it going in with the anticipation of holding on to it for a longer period of time versus the sell upon completion. A lot of clients want something that they can hold on to for a few years where they could collect some income from that during the hold period versus sell upon completion. But as of right now, the number one objective for the projects that we've worked on with them, the 3 deals, that's build to sell.
Yeah, no, I figured the program obviously works. I was just curious if they were
Yeah,
planning on diversifying their options
And
in
I
a
think
sense.
I think there would be a lot of interest from that. I think they're you know,
Sure,
if they
yeah.
put together instead of 2-year, it's a 5-year program.
Right.
I think that still is within the benchmarks.
Yeah.
You know, in this space, we see deals everywhere from 2 years up to one we worked in Toronto with a group that was a projected 10-year time frame. We sort of find the sweet spot of investors wanting to be involved in these sort of deals. Anywhere from 2 years to, I would say, 6 years is kind of up on that threshold. Anything longer than that, people are generally tend to get a little distracted by the length of it. And
Fair.
so,
Yeah.
but yeah, hopefully in the next little bit we would see one where it's built to hold.
Sir, for this specific project, you know, the WestUrban owned the project as an LP, and how much is the percentage of the WestUrban as LP they have?
So WestUrban is they won't own any part of the LP. It'll be all limited partners.
Oh, okay. They don't have any share in the project.
So-
just as a GP.
So of the total, there's about 3.8 million that they're raising for this project. Our team itself, we have a $300,000 allocation for our a $3 million allocation for our clients. So WestUrban internally will have 800,000 of that equity stack. And so I don't know how they're breaking that up. They might have some of their partners investing. Generally, it'll probably be their investor base that have invested with them in the past. But in terms of their personal equity or general partner equity in this particular project, I don't know if they are or are planning on participating in this one.
Okay, and how much would be the GP fee for each project?
So the GP fee, they charge an asset management fee of approximately 1%, and then as well as they have a profit share of 50-50 on the split on the end.
50% of the net profit to the
50.
GP? 15 or 50?
50, 50.
50,
Yeah.
okay. You maybe have to, this profit is after splitting in two, or just you have to split it in?
So that's the total profit on sale, and then that's split between that's the that right there is the investor return.
After paying the GP fee.
Correct. Yeah.
And then what happens if it's gonna be rented out? Like if the scenario goes the way that you're not selling it, what happens? I mean that split 50-50 for the GP.
Yeah.
How much of the rent they will be collecting?
It's the same split, 50 split throughout. Yeah.
What about the guarantees on the loan? Obviously, as also limited partners and then as GPs,
Yeah.
they will be covering 100% of the guarantees.
Yeah, so as a limited investor or a limited partner in these projects, your liability is limited up to the capital that you invest. So there is no mortgage recourse against the investors. There's no further liability. If you invested $100,000 into that project, you could, in the subscription documents, it will say you could lose all your money. Please initial here on one of the risk acknowledgements. But as an investor, that's the liability that you're limited up to is the capital that you've invested. There's no mortgage liability for the limited partners.
For those interested, what's the next steps?
Yeah, so I'll get Dan to circulate everyone's email so I can send electronic copies of the package as well as the detailed financial pro forma as well as the full investor package. Next Wednesday, Raj, who's one of the partners there at WestUrban, he's going to be doing a webinar presentation at 1 p.m. So that'll be both live on Zoom as well as recorded for anyone that can't make it. And then as well as we're going to be doing an investor tour at the end of September for anyone or their clients that want to see the quality of the construction, meet the team, and see some of the projects in person. So we'll get all the electronic packages out to everyone. We'll get the webinar link as well as the recordings out next week. and then keep up to date on the investor tour at the end of September for everyone. And Dan as well will have all this information. I know he circulates this as well to the team, so we'll continue to keep up to date that way on this project as well as the future ones. So following Vernon, from our conversations with WestUrban, we're expecting to see 3 projects here to wrap up the year. The first is Vernon, the second is in Salmon Arm, so just outside of Vernon, about 40 minutes, up in the interior region there, and then as well as Souk, which is over on Vancouver Island there. So those are the 3 different projects we expect here to wrap up the year.
Are they willing to expand it more, like in the near future?
Yeah, so they're looking, Alberta's a market that they're looking in, as well as Winnipeg. For us specifically, we're more focused on BC. We like sort of the consistency of the market, for lack of a better description, versus oil and gas, the volatility of the Alberta or Calgary markets there. So from an investment standpoint, we're more focused on these secondary markets, but I know that there's low vacancy rate and demand for these types of projects, so they are continuing to look into these other markets. As of right now, we're mostly focused within the core and secondary markets here throughout BC.
This one, if I remember correctly, Duncan was 150 minimum investment?
Yeah, so that one was 150.
Yeah.
This one is $100,000 minimum to participate. As of right now, these investments are available only to accredited investors with a cash investment of $100,000. We are expecting in the latter half of this year for WestUrban to open that up to eligible investors, which is a different category of people, so you don't have to have as high of a qualification to participate. And then as well, lower that minimum down below $100,000 and accept registered funds. So as mentioned, some of these other groups we work with, they accept RSPs, TFSAs, and so we're hoping down the road that accredited, eligible, registered funds will all be accepted, so that way more investors are able to participate.
Do you have any LPI agreement in place for this project?
Yep. Yeah, so I can share the limited partnership agreement for each of these, and so subscription documents and LPA set up for each of the individual projects. So included in the package, we'll make sure to share that as well. So.
Brilliant. Thank you so much.
Thank you.
Thank you.
Thank you for the questions. Please make sure to take some food with you.